Welcome back to Build, Grow, and Scale BGS, the channel dedicated to helping you navigate the ever-changing business world and scale your ventures to success. Today, we're diving into a hot topic. What could the Trump administration mean for businesses and personal finance in 2025? With his track record in economic policy and a highly debated approach to governance, many are wondering, how will the next few years shape the financial landscape? Now, I would love to make it clear that I am neither pro-Trump nor anti-Trump. I will try my best to make this video as unbiased as I can be. So listen up with the aim of learning a thing or two and get an objective view from me. Let's go on. In today's video, we'll break down the possible economic impacts, from tax policy to trade tariffs to healthcare changes. So grab your coffee and let's get into it. 1. Tax policies, individual and corporate. First up, let's talk tax policy, a cornerstone of President Trump's administration during his previous term. In 2025, we could see a continuation of policies aimed at cutting corporate taxes and potentially offering individual tax relief. Let's break it down. During his first term, Trump pushed through the Tax Cuts and Jobs Act, a law that lowered the corporate tax rate from 35% to 21%. For businesses, especially large corporations, that was a huge win. Lower taxes mean more money in the pocket of companies, enabling them to reinvest, grow, and hire more employees. But how will this affect you as a business owner or entrepreneur? In 2025, it's possible we'll see further corporate tax cuts aimed at creating an even more favorable environment for businesses. For large companies, lower taxes can mean more capital for expansion, research and development, and hiring. If you're running a business, this could open doors to more opportunities for growth and innovation. On the flip side, if you're an individual taxpayer, tax cuts may benefit you too, depending on your income bracket. The Trump administration historically favored cutting taxes for higher income groups. So if tax reform continues along these lines, you might see more disposable income, especially for those in the upper middle class or higher. Of course, we'll need to wait and see how exactly the administration structures these cuts, but that's one potential path forward. 2. Deregulation and business environment. Moving on to deregulation. One of the hallmark strategies during the Trump administration has been reducing government regulations, particularly in industries like energy, banking, and healthcare. In 2025, we may see an extension of this trend, and it could significantly affect how businesses operate. Fewer regulations means that businesses have more flexibility and lower compliance costs, which could be particularly beneficial to startups, small businesses, and industries like tech and energy. If you're an entrepreneur, deregulation could give you more room to innovate and compete. No more bureaucratic red tape slowing you down or stalling your ideas. Now, while that sounds great for business owners, it also comes with potential risks. Reduced regulations in areas like environmental protections or worker safety could lead to long-term sustainability challenges. That's something to keep in mind if you're looking at your business model through a long-term lens. 3. Trade policies and tariffs. Next, let's talk about trade policies and tariffs, a topic that stirred up a lot of controversy in Trump's previous term. The administration's approach to trade has been focused on America first, renegotiating global deals, and imposing tariffs on countries like China. In 2025, we could continue to see tariffs on imports, especially from China, or even new ones on other nations. While this might protect domestic industries in some cases, it could also raise costs for businesses that rely on global supply chains. If you're a manufacturer or retailer that sources products from overseas, tariffs can increase your costs, which might get passed on to consumers in the form of higher prices. For international businesses, these tariffs might also create uncertainty. If you're working with foreign partners, or if you have operations in other countries, the landscape could get more complicated, especially if trade wars intensify. That said, there's also the potential for new trade deals that could open doors for businesses. If Trump's team negotiates better terms for U.S. companies abroad, it could provide new growth opportunities in emerging markets. 4. Inflation and monetary policy. Now, let's look at inflation and monetary policy. In recent years, the U.S. has experienced periods of low inflation and relatively low interest rates, which have been great for businesses and consumers. But how would this trend continue under a Trump administration? If the Trump administration focuses on massive spending to stimulate the economy, like the stimulus checks and infrastructure spending we saw in the past, there could be inflationary pressures. Inflation generally leads to higher prices for goods and services, which could affect your bottom line if you're a business owner. Interest rates could rise as the Federal Reserve responds to inflation, which would make borrowing more expensive for both businesses and individuals. On the flip side, if the administration focuses on fiscal restraint and works closely with the Fed, we could see an environment of low interest rates for a prolonged period, which would make business financing and consumer borrowing cheaper. That's great news if you're looking to expand your business or finance a home purchase. 5. Healthcare and insurance. Another key issue that could affect your finances is healthcare. During his presidency, Trump made several attempts to repeal the Affordable Care Act, ACA, and in 2025, we might see similar efforts to reduce government involvement in healthcare or push for more private market solutions. For businesses, this could mean lower healthcare costs if the government rolls back certain ACA requirements. If you're a small business owner, this could give you more flexibility in how you provide healthcare benefits to your employees. However, the flip side is that individuals could face higher premiums or fewer options for insurance coverage, especially if ACA protections are weakened. For consumers, the direction of healthcare policy could have a significant impact on your personal finances, depending on your health needs and whether you have access to affordable insurance. 6. Social safety nets and labor market. Let's talk about social safety nets, specifically Social Security, Medicare, and other welfare programs. If the Trump administration continues its push for reducing government spending, we might see cuts or reforms to these programs, which could have a profound effect on your long-term financial planning. For example, if Social Security benefits are reduced, that could affect your retirement savings, especially if you're relying on those funds. Additionally, changes to Medicare could impact your healthcare costs as you age. On the other hand, if the administration pushes for labor market reforms and tax incentives for businesses, we could see more job growth and lower unemployment rates. This would be great for individual income and could increase the demand for skilled workers, benefiting those in growing industries. 7. Infrastructure investment and job creation. Infrastructure has been a key focus for the Trump administration, and in 2025, we could see a renewed effort to invest in roads, bridges, and public works. This would have a ripple effect on the economy, creating jobs in construction, engineering, and related sectors. For businesses, this could mean more demand for goods and services tied to infrastructure projects. Additionally, a focus on infrastructure could improve the overall business environment by improving transportation networks and logistics. This would benefit businesses that rely on moving goods and products, as well as those in the construction and real estate sectors. 8. Environmental policy and sustainability. Now, let's briefly touch on environmental policies. Under Trump, we've seen a more lenient approach to environmental regulations, especially in industries like fossil fuels and energy production. In 2025, we might see policies that continue to support traditional energy sectors like oil, gas, and coal. This could create new opportunities for businesses in these industries, while renewable energy companies might face greater challenges. However, the environmental impact of these policies could be long-term, as we could see increased concerns about climate change and sustainability, affecting consumer behavior and investment in green technologies. So, what does all of this mean for businesses and personal finance in 2025? It seems that the Trump administration's focus on tax cuts, deregulation, and job creation could create a favorable business environment, especially for large corporations, entrepreneurs, and investors. However, potential trade wars, inflation, and cuts to social programs could also introduce risks and uncertainties. For business owners and consumers alike, it's all about staying agile. Whether you're scaling a startup, managing your finances, or planning for retirement, understanding these economic trends can help you make smarter decisions in the years to come. So, what do you think? How do you think the Trump administration will impact the economy in 2025? Drop your thoughts in the comments below, and don't forget to like, subscribe, and hit the bell for more insights on business growth and finance strategies. Thanks for watching, and as always, keep building, growing, and scaling your future with BGS.